Hello guys, and glad to have you on board again today. Express briefing in here, just don't want to go down the road of recording video stuff anyway. So let's make this thing real quick. There's not that much to talk about, but I think today is an interesting swing day, or at least could give us information about what's to come. So first things first, we're going to figure out what the battle is actually all about. So in a much more short-term behavior, these are the weekly switching points. Okay, so starting this week, we now are retracing or trading into negative territory for some assets, but I still have a look at the S&P 500 as a broad reference. Okay, Dow Jones is already negative. Of course, the Nasdaq, who has been crazily overperforming earlier this week, is still bullish. Of course, Russell's turned negative. Everyone else has basically turned negative throughout the week. So the question is surrounding the previous week, which has been bullish all across the board. Normally, we have some kind of a range week. So don't be too much bearish right now. That would be, I think, quite inappropriate. So too much bearishness in here could be harmful for those who play this game, but being too much bullish in here as well could be damaging for multiple reasons, because what happened last week feels totally stupid to me, but most importantly the way we started the week with the tech sector. So this is still where I have my personal doubts and where I'm still having a look at possible trades where risk-reward ratios could be very attractive, but this is of course much larger time frames, which means what I can deal with in order to have a bearish opportunity into this market is definitely not trying to fight against these huge, stupid, low volatile trends we've figured out for the latest few days, but instead looking at a broader range picture into the 4-hour chart time frame in which we still deal with potential third range boundaries all across the board. So this is my only opportunity out there, saying that we're actually if you want to fight against these recent bull trends, the only way you can do it is not fighting these trends, is fighting for the 4-hour market top in a third range boundary opportunity. So my big question is, who's going to win this battle? Because there is definitely a trending behavior that has gone on, and specifically into the 3-minute, 15-minute time frames charts, facing this probability of a third range boundary on higher time frames. So this is fighting against that, and I don't know which one is going to win. Though today, I think, is probably going to give us that answer, because we're reaching the areas in which the 15-minute trend guys might be willing to reactivate those trends. So this is the reason for why we're making this podcast today. This is something for you to bear in mind. So there is a risk limitation and a risk management to make out of these areas. For those who are bears and those who sold the 4-range boundaries, then you might have to wonder what's going to happen out there. This is a risk for you. But let me be real clear, as for example today, we're going to take the Nasdaq because that's the one I chose personally, but if you dealt with the S&P 500, still is totally appropriate, I think. But anyway, here's what this is about, okay? So the thing is that we do have a mature range on the lower time frame, okay? 15-minute chart time frame, you can see the 2 sets of waves, which means we have a mature range retracing approximately 38%, which could be an opportunity for a pullback. So if we were on the verge to pull back there, okay, and reactivate, then we would have a final excess. That's what the strategy suggests. The thing is that, of course, looking at the way we've trended the 15-minute, which has gone totally stupid and irrational in the end, means that, okay, we can go from bullish to actually reverse this thing and create a bearish trend. So we can definitely do this. So is this one of these moments in which the market is just going bullish to bearish because we are navigating a higher time frame range, which is the case, at least for now, or is this just an emerging trend that will flush out the probabilities of an H4 time frame range to build its market top and third range boundary? Okay, one is fighting another. So as you deal with the bearish opportunity in the 4-hour chart time frame, which is what I do personally, you're supposed to risk manage your trade out of the trend channel. So you should be just barely halfway through it, and therefore you shouldn't be doing anything. But at the current given time, my personal concern is the fact that we're still dealing with very aggressive bulls and a very aggressive bullish behavior. So I think that an appropriate risk limitation could be done out there. either reducing your stop loss sizing or partial profit taking. It's really all about your personal decision out there. I can definitely tell you what to do. It's just I think something could be done out there in a rational way. Nothing more than just a 25% profit taking, which is what I done yesterday. Because anything higher than that would be stupid. It would be limiting the gains after taking the risks. So that's not what I'm willing to do. But just, I think, reducing my initial position sizing just in case, because I'm not yet willing to lower the stop losses. But until then, navigating into some shadow areas in here. So don't have a look at the market each and every 15-minute close, okay? It's really all about you're in. Let's try to figure out what's next to come. So I'll give you a personal way of managing things. Yesterday has been all about breaking the 15-minute second range boundary, okay? It was in here, we totally broke it, and as you can see, the market broke it, pulled back to it, and kept pushing, which still leads me to believe that this market is very less likely going to build a third range going to build its fourth range boundary out there, and if it does, it's probably going to be selling in between. So that is something we need to bear in mind, okay? We've gone further than the 1-to-1 ratio, okay? Breaking the second range boundary at a 1-to-1 ratio where I partial profit took yesterday, which is this area, okay? So what happened later on is that the market pulled back and pushed further down the road. So I think this is a sign that the bulls are not buying. But of course, that doesn't mean we can just take that for granted. There's still the 38% Fibonacci cluster area that could work around. We still have this intermediate support that could work around today. And we do have a volatility boundary limitation out there. So, of course, looking at the way we totally fucked up the resistant boundaries out there, we could fuck up immediately, and like I said, going bullish to bearish without a problem. But still, this is a cluster you can't ignore. There are some horizontal support footprints on Fibonacci clusters with a reduced moving, with a limitation, volatility limitation nearby. That is a significant amount of risk for those who have quite some gains in the market so far. So you do as you please, lowering the stop losses, like I said, partial profit taking, but I think something could be done out there. If you really want to risk take, then of course this is a 4-hour chart trade, and therefore you shouldn't be doing anything until reaching out the appropriate areas. And the appropriate area is the trend channel. Okay, so that's why I would say as long as we keep prices below the second range boundary, there are far more risks to the downside reaching out this trend channel rather than paying the 38% fib more than anything else. More importantly, because now the retail traders are getting into buying the market, just exactly like I predicted. The market went up, they were short selling aggressively where they should basically have gone out and gone in again. And now that the market is falling, which was their initial plan, now they're getting to buy it. I just can't understand the fucking human psychology into this perspective. Or actually I do, but this is so stupid. But anyway. Okay, so that is all for today. So bear that in mind, okay? There is a big fight, and I would say as long as we don't close on top of the second range boundary, oh man, I still feel like there is a little bit more bearishness down the road into this market. But this is not a random price area. This is an area in which things that may happen into the 15-minute context could actually matter, okay? But that's all about it. So bear that in mind, you guys, today. Don't be too aggressive if you want to reduce your risk taking. Don't forget that if you profit take too soon, then you're limiting the gains on your scenarios. Okay, that being said, plenty of other stuff to have a look at. Basically, right now, Apple is really, really interesting to me. I got out of Tesla for the bearish exposition on the portfolio. I'm back to 100% cover trade, just like I did basically a few days ago on the stock indices. Because, yeah, Tesla on the daily chart is breaking the third range boundary in here with a daily candle close. I don't like that. The momentum could be bullish and stuff like that. So I'm not confident enough because, of course, I don't like these things, but we're approaching the earnings release, and I just don't want to be the dumb guy who's holding some bear trades on the market that could explode. So I know people are getting absolutely crazy about this thing. Once again, I don't understand any of it. That's the reason why I'm entirely out this market. Just I'm short selling CFD contracts for the exact amount of what I have in my trading account on stocks. So I'm basically entirely off the market. What I'm winning on one end is what I'm losing on the other, because I have absolutely no goddamn clue of where this thing is actually going. So yeah, I'm out of Tesla. If it goes up, I'm not going to make money. If it goes down, I'm not going to lose money. It's just I'm waiting for appropriate, reliable information to trigger an action. Until then, I'm out. That's pretty much it. And still bearing in mind USD/JPY was not giving an answer. Still looking at gold, who is trying to figure its way either up or down, but today is going to be a crucial element for me. If today is an upside day, then I'll be happy and pretty confident with a target right up there, and I'm definitely not going to target anything more than that. That's really my maximum profit taking area. Okay, and depending on the time it takes, I'll eventually get to lower these expectations, but that's pretty much all about it. I'm not yet bullish on gold. I think the best case scenario is to maintain prices out there for a long time, and the worst case scenario is we just go flat for a bit, fuck up my entry, and we'll go bear for much lower valuations. But that's pretty much it. Okay, so I'll let you guys know if I find some suitable trades. Until then, it feels very speculative all across the board, so I'm willing for the market to tell me what's next. I also got out of Link. I just decided to trigger that. We do have trending signals. I don't like these things. So yeah, anyway, I mean, I told you I was very likely going to get the fuck out, so that's what I did. Okay, if it goes up, then no worries. I still have some of them. I think I kept 32. So it's just a very, very like very speculative trade, just in case. But okay, I like the tech, let me be honest, I like the tech, but I don't want to be into this thing anymore. I think it really could be bought at much cheaper prices. I'll let you know soon enough, of course, but until then, today's big element is what we've talked about. Are we going to get a pullback, or is this just bullshit, and are we going to just totally fuck up the bulls just like we did with the bears a few days ago? Big question mark for today. Don't trade it too violently and too harshly. Avoid extreme sentiment right now. That's what the dumb money is doing. So don't be dumb, okay? That being said, see you guys later. We'll eventually get to make a second live session later today. I was supposed to be off the market today, but I actually had to move this to next week's Tuesday. So I'm going to be available today, and eventually I'm going to consider either recording a trading lesson or making some live practice session into Discord. So I still haven't decided yet. I'll let you know throughout the announcement notification channel. Bye, guys.